Hello, you're watching Targets in Focus here on Dukascopy TV, and joining me today is Antje Praefcke, a senior FX strategist at Commerzbank, to talk about G10 currency pairs, the yen, the Australian dollar and the New Zealand dollar. Antje, thank you for joining me today. First off, it makes sense to look at the yen first after yesterday's Bank of Japan meeting. Do you believe it was the right move not to announce any new stimulus measures, and how has this affected your forecasts going forward?
Well, I think it was quite a wise decision. I mean, you don't, as a central bank, you don't have always to do what the market expects, and for the moment they are waiting for their measures, the initial measures they have taken to be implemented and to wait for the effects. That's the first thing. And the second thing is they have seen quite high volatility in the bond market over the last couple of weeks. And this is a concern to the Bank of Japan. They have opened discussions with the big market players in Japan, and they have intervened in the bond market as well. So for the moment they have different construction areas, working areas I would say, and they should start to focus on different areas and not mix all of them. And they have a very expansionary policy, and it wasn't necessary yesterday to change anything in the short term about the policy. We haven't, based on this assessment, changed our forecasts. We are still of the opinion that in the medium to long term the yen will depreciate against the US dollar. Two reasons for that. The first reason is the continued expansionary policy of the Bank of Japan, then the fact that in the medium to long term, especially if inflation expectations do not rise, whereas as we have seen the yields and the 10-year bonds will rise, they will have problems on the fiscal side. So there's a fiscal risk of sustainability of that long-term debt. So two main reasons for yen weakness. And on the other hand, we still expect the Fed to taper down QE3 towards the end of the year, and this will support the US dollar. So we see the dollar yen rising over the next month. As a year-end target, we have 115 in dollar yen.
Moving on to the Australian dollar, just how far do you think it will drop? And is the flagging commodities market the only thing that will help change this trend?
There are different reasons for the Aussie to be under pressure. First of all, there was much positive priced in over the last couple of years. We had the boom in commodity markets, and we have strong incomes in Australia. We shouldn't forget that the economy is still running well in Australia. They have their problems. They have a two-speed economy, the booming mining sector, and on the other hand, the ailing manufacturing sector, and the strong Australian dollar in particular weighs on the manufacturing sector. So if we have less activity in the mining sector because of the world economy slowing down, because of Chinese growth coming down, then we have a problem. We have a gap that the manufacturing sector has to fill in, taking over from the mining sector in the economy. Now, in case we have a strong Australian dollar, this will be a hard thing to do. This is one thing. The other thing is market expectations that the RBA will keep rates for a certain time low and may even cut rates again. And then we have the US dollar gaining ground, on the other hand, on expectations over the last weeks. I mean, they are mixed now during the last days, but overall, the market expects the Fed to taper down QE3, let's say, towards summer or at least autumn, and this supports the US dollar against the Australian dollar. So we have different factors weighing on the Australian dollar at the moment.
What are your forecasts then over the next 12 months?
Yes, in the very short term there may be some upside correction in the Australian dollar, because I think the last move is a little bit overstretched. Fundamentally, I don't see the Australian dollar suffering that much as the market has taken it as a, let's say, a weeping boy. But in the medium to longer term, I see some Australian dollar weakness against the US dollar, because commodities will kind of like recover throughout the year but not see the highs we have seen over the last couple of years. And then secondly, the Fed is likely to taper down its QE3 volumes, meaning that the US dollar over the end towards the end of the year will gain ground. So I expect a moderate slowdown in the Australian dollar against the US dollar, and I expect Aussie against US dollar to slip towards 0.93 towards the year-end 0.90 maximum.
Closely linked, of course, is the New Zealand dollar. Has it reached its peak, and will you be more bullish or bearish in the coming months? And just how much are the interest rate differentials and central banks affecting this particular currency?
Yes, the central bank is closely entangled in this story. More and more, the RBNZ is actually stuck between a rock and a hard place. Governor Wheeler made that quite clear at the end of May. He warned against the risk to financial market stability because he's primarily concerned about the overvalued currency on the one hand side and the overheating housing market on the other hand. Talking about interest rates, on the one hand, the interest rate level in New Zealand looks actually too high by international standards because it attracts investors, which pushes the Kiwi dollar higher, which in turn weighs on growth and inflation. Now, on the other hand, the high and continued rising private household debt and the overheating housing market suggest that the rates are too low in New Zealand. So the RBNZ is in a dilemma. And in response to this, it has announced further FX interventions and tighter regulation of mortgage loans. So we expect, for instance, this night the RBNZ to keep the key rate at 2.1% and to continue to stay pat on the interest rate level, but on the other hand, to emphasize their willingness to continue to intervene against the strong Kiwi. So I think that the Kiwi dollar against the US dollar is set to remain below the 80 level for now. There may be some kind of correction with higher commodity prices. Remember that New Zealand has over 50% of export in soft commodities, agricultural commodities. But overall, due to the RBNZ basically capping the New Zealand dollar strength, and on the other hand, with the Fed reducing QE3 volumes towards the end of the year, supporting the US dollar, I, like with the Australian dollar, expect a moderate slowdown and a moderate depreciation of the Kiwi dollar towards 0.78 to 0.76 towards year end.
Okay, thank you for sharing your projections on the yen as well as the Australian and New Zealand dollars. My colleague Natalie McDonnell will be taking a look at Iceland's rate decision today, as well as examining the country's economy and currency more closely. So do check that out. Until next time though, goodbye.